Perfect. Take it away, Zach.
All right. Hello, I'm Zach Saporito. It is a pleasure to be here. Hello, judges, and hello, everybody. This is pretty amazing. I am pitching Citigroup. Now, Citigroup is going back to being an ordinary, boring bank. And no on the front that might sound bad. Well, I'm going to break down why this is a great thing for Citigroup and why it's going to propel their stock price. Now, I just want to go a little more into what Citigroup is. Well, they're a globally known bank covering 5 segments. Those segments being wealth management, institutional services, investment banking, and they have their markets division and the United States personal banking division. Across those 5 segments, they cover over 200 million customer accounts, which accounts for $2.4 trillion in assets. That makes them the 3rd largest bank in the US in that category. And as of recently, they've been trading at $61 a share. My price target is $90, which I'll get into later in my slideshow. The 4 core reasons behind my investment is that they're corporate restructuring. This is going to simplify their bank. I'll tap more into it in the next slide, but is going to massively reduce their costs and allow them to do what they do most profitable in a bigger manner. They also have a very attractive stock valuation, though this has been due to some reasons in the past. They still are very attractive when compared to any of their peers, and they're very well diversified. Not only are they across the whole world, they're also across 5 different segments of banking. And lastly, their projected growth is pretty impressive, considering not only are they looking at this cost-cutting EPS growth, they're still going to be seeing revenue growth. So to highlight this restructuring, they are reducing from 13 to 8 management layers. This is going to streamline their business reporting, and all those management layers are going to, or the top management layer is going to directly report to Jane Fraser, unlike before. This is going to streamline that business reporting. And overall, they're cutting around 20,000 of the workforce, which equates to around 10%. Also, they're condensing to those 5 segments I mentioned earlier and exiting unprofitable regions such as Russia, other Middle Eastern countries, and they're spinning off some businesses like Mexico. This is a showcase of their stock performance. As you can see in the blue, that's Citigroup. They performed around 40% in the past 12 months. The S&P 500 is on the bottom in yellow with the financial sector in the middle in the red. Citigroup has performed very well in the last 6 months, highlighting that investors are starting to see this restructuring take place with Q4 2023 and Q1 2024 results. To highlight the competition, first, I just want to go over quickly. The industry is looking at around 2 to 3% growth over the next 8 years, compounded annually. And to highlight a little bit of the competition, I really want to point out this statistic, the price to book ratio. Citigroup trades at 0.62, while JP Morgan trades at 1.8, Bank of America 1.12, and Wells Fargo trades just below 1.3. So Citigroup is trading at half of the price to book ratio of nearly any of their competitors. And if you look at other big banks, you'd be seeing the same numbers. Now, there are some reasons for that due to their profitability lacking, which I'll get to in the next few slides. So to highlight more into their competitive position, they do have a pretty wide economic moat due to their brand name, and they're across all these segments across the whole world, not just in America. Strengths, to highlight one, I want to go into that too big to fail. I mean that as in the government is a backstop. And what that really highlights with the stock is that Citigroup has a cushion under their stock price as well as their company. Investors know that, so there is a bit of a pillow when their banking volatility comes in. I want to highlight some weaknesses and address them, as well as the threats. Fluctuating market share. Currently, Citi has around 4.5% of all United States assets. Now, it is fluctuating. This applies to any of those big banks. It always has been fluctuating. They're a bit overly diversified, some would claim. Now, to address that, Jane Fraser, the CEO, and Citigroup, they're completely restructuring, simplifying to completely eliminate that worry. That has led to some temporary cash flow problems. Threats, these all apply to any big bank in the industry, but regulatory constraint, the Glass-Steagall Act in 1933, which divided commercial and investment banking, has since been pushed back, actually, thanks to Citigroup in 2000. And if something like that comes back and splits the two, they'd be in trouble. Economic downturn and fintech with an innovative sector. So far, Citigroup has done a fine job keeping up with financial technology. To hop into the revenue, Citigroup in 2023 generated $78.46 billion. Now, a lot of this 45% came from interest income. In this chart, this highlights the last 4 years. Oh, shoot, wrong button. Uh-oh. Okay. The red is highlighting the institutional clients group. That is 60% of where Citigroup made their revenue in the last year. And the blue is 40%, which highlights their consumer banking. Now, Citigroup is expecting 3 to 4% in annual growth over the next 3 years. And that's going to be coming from a lot of different of their segments, but mainly their wealth management with new Andy Sieg heading it from Bank of America Merrill Lynch. And also their continued dominance in the credit card industry. To tap more into their financials, I don't want to get too confusing here. Just want to go again to this book value per share, $98.71. And not to mention as well, their tangible book value is sitting at $86.19. They are trading well below both of those. And this is really because they've been lacking this profitability. Down here, their ROE is at 4.5%. It's since been swinging back in Q1 of 2024. And Jane Fraser and the bank are expecting that to continue to swing back upwards towards 10% by 2026. This is going to help them trade at a more relative valuation to their competitors. And also that their net margins will look to be increasing as well over the next few years with this restructuring. So my favorite chart on this whole slideshow, because, well, it looks pretty freaking good. 2026, Citigroup is expecting a doubling of earnings per share. And this isn't a tech stock. This is Citigroup. It's a boring bank, and they've been around for 200 years. So this is because of that restructuring, but it's also because they're still seeing revenue growth. They're looking at 36% compounded annual growth rate in just the next 3 years, which will lead them to over $9 a share in EPS in 2026. In fiscal year 2023, they reported $4.04 earnings per share. Now, to my price target of $90, which is around 48% upside in the stock, I did multiple different models, including 2 discounted cash flows, relative valuation, and I also backed it up with a dividend discount model. Now, that brought me to, the average of those brought me to a price target of $103, while I took around a 15% margin of safety to account for their risk, which got me the $90. And just to quickly highlight over here, not only is their intrinsic book value pretty solid against competitors, their forward PE pricing in that future earnings is also ranks amongst the 3rd lowest of those names up there. Okay, catalyst. So after all, we're talking about the stock price and what's going to be boosting the stock price. Well, it's really going to be driven by that restructuring. This restructuring is going to really increase their profitability. And what that's going to do is bring a lot of optimism from the investors into the stock. Also, the owned company is going to be backing that stock by performing share buybacks. They just started $500 million last quarter, and they look to continue that after passing Fed stress tests, capital ratios, and the recent Basel III, which just came to an end. So this is a bigger theme among the broader industry of banks. You'll be seeing a lot more share buybacks into the end of 2024. To highlight a little bit of the chart, over here is the COVID crash. And Citigroup has yet to recover from that pre-pandemic high, which if you look at other big banks, the Citigroup is a loner. And they have a lot of potential upside because of that. And they actually, again, soared like I was mentioning earlier. They're coming out of a longer term bottoming zone, and they're seeing higher highs almost every week. Now, to talk a little about how they are environmentally, Citigroup has already pledged $250 billion towards environmental projects. Socially, they have the Citi Foundation, which focuses on low-income communities in urban areas, teaching financial literacy. And as also the governance, 10 of the 13 directors are independent. And Jane Fraser is the only female CEO of a top 50 US bank. And not to mention, Jane Fraser has been doing the best job of the last 12 restructurings that Citigroup has tried to go through. And artificial intelligence. So Citigroup is enhancing their services with AI. Mostly it's just through mitigating against risk and detecting fraud. AI is being used to help assure credit when they're looking to loan out. And also is going to enhance their customer service and improve their algorithmic trading. So this all brings me to that price target of $90 with a longer term horizon, 12 to 24 months. Again, I just want to hammer in that this restructuring is going to allow Citigroup to become a boring bank again, but also be able to compete equally with JP Morgan, Bank of America, Wells Fargo, any of those overly valued banks, because they're going to become a much more profitable and efficient bank. Thank you. And I'll take any questions, and I have my appendix slides.
Great job, Zach.